what are the themes, you're wondering? Well, we're talking about demographics, deglobalization, debt, especially on a global scale and locally as well, inflation, and interest rates. Two hot button topics there at the end, theme 4 and 5. So, John, those are the themes. How did we arrive? Why are we doing the show? How do we arrive on these themes, and how should investors be thinking about this as we go through it?
Well, we were in an investment committee meeting, and we think and invest thematically. I mean, we're fundamental investors, but to be a fundamental investor, you have to be looking for certain themes, so you have the wind at your back, so to speak. And we were talking about demographics and deglobalization, and trying to put that in the context of what are the new big things that are going to happen over the next 10 years. We were very early into technological disruption that's still playing out and will continue to play out. But we thought, we're coming out of a global pandemic, and it definitely has changed certain things. It's not just because the pandemic that started out with Trump in 2018, really starting this, deglobalization and protectionism and populism. And we were talking about that, and I thought, I think maybe investors would be interested in hearing about what we think about and what our focus is. And so we thought we'd do the show.
Right, so these are ongoing themes and trends that are affecting investors on a daily basis and will continue to do so over the next few years. So what does that mean to you? How do you go about protecting yourself and, again, growing your money? So let's bring in JJ here. He's got some really fascinating charts you're going to love, so he can tell his story along with his great insight and information visually as well, so you get a sense of what he's talking about. So we're going to start with demographics, and JJ, let's have you kick it off here. We're looking at UN world population, and all we're seeing are these growth estimates and projections heading down and to the right. Tell us what we're looking at and why is it happening?
Well, since 1968, the growth rate of world population has been on a declining path, largely because the world has become wealthier, and wealthier nations tend to have lower fertility rates, fewer children per couple, and we've also become obviously less agrarian, particularly in the emerging market economies where fewer children are needed to keep the family business afloat. Also impacted, of course, by China's one-child policy, which was introduced in the 70s and has slowed Chinese population growth down. So it's an entrenched trend. Demographic forecasting, which is the thick black line underneath the black arrow in the chart, tends to be amongst one of the most accurate. And it's headed down. Maybe the exact numbers won't be perfect, but the fact of the matter is the trend is very well established.
Now, you touched on China. We're going to move along to a U.N.China population chart. And what's interesting here, and you touched on it, is the fact that couples are allowed to have more than one child now. They have been for a while, but still the birth rate continues to fall.
Yes. If you look in the major urban centers in China, where people are becoming wealthier and costs are a lot higher, and you don't need multiple children for, working on the farm, the birth rate was below one child per couple already. So you took away a non-binding restriction on a lot of Chinese households, and they're not responding. When you look at the chart in front of us here and look at the path of Chinese population growth, according to this 2019 projection by the United Nations, in 2033, the Chinese population will be declining. That'll get updated, but the fact of the matter is it's heading into negative territory. And more seriously, it looks like the working age population, the group of the population aged between 20 and 69 years of age, is already shrinking now, which is a huge challenge for a country that's trying to become wealthy. And it's going to become an aging population before it becomes a wealthy population. Japan and Germany both became wealthy before they started aging.
Let's bring it locally here to Canada. We're going to look at the Canadian population chart here. And you have helpfully isolated with that the red box or triangle, whatever you want to call it, the big boom post-Second World War. But that clearly has faded, and we are where we are now. What are we seeing here, JJ?
Well, basically, population growth has downshifted in Canada. It's been running around 1%. It's not as bad as some other countries because Canada's been running a much more open immigration policy. And so we're not seeing the major decline, the sharper declines that we're seeing elsewhere, but we are seeing slowing. And as the population ages and people leave the workforce after retiring, there's going to be some big challenges ahead. So when we look at the projections for Canada, they're going to be downward sloping to the right as well, just like the other countries. And once again, I think it is instructive to highlight what happened after the Second World War, because we're going to come back to that. A lot of that was the baby boom, but it was also immigration. Huge amounts of immigrants came to Canada and they hit the ground running and they were contributing to the economy immediately. I should have highlighted it too, what on the far left of the chart, the population boom around the time of the First World War.
And then moving along to the United States, JJ, it was just the other day where it was announced that they had their lowest population growth in history. Is that correct, or was it the lowest birth rate?
The lowest population growth in history in 2021. I haven't highlighted it on this chart because the Census Bureau hasn't given us a nice smooth pattern to show yet. But the population in the U.S. barely grew at all in 2021, and I think we'll find that when we see the 2021 numbers in many economies, partly because of the increased death rate related to the COVID pandemic. But in the U.S., this has been a pretty entrenched trend. Some of it is tighter immigration restrictions, mostly in the recent years, but also the birth rate is falling in the U.S. And there seems to be some evidence historically and across nations that countries that restrict birth control and access to family, all forms of family planning, including the A word, they tend to see lower birth rates. And that's what we're seeing in the U.S. And that's a challenge for them. And once again, you look at the history during in the aftermath of the Second World War and around the First World War, huge waves of immigration on top of high fertility rates and birth rates really helped the population in the United States.
JJ, when we were talking about this in our meeting, I think it's instructive without getting too complicated. Why do we care about population growth? Some people would argue that, the fewer people on Earth, the better. But why do we care about population growth?
Well, I think there's something to be said about do we need more or less? From a climate change perspective, maybe less is better. But from the perspective of what's good for the economy and what's good for investors, which isn't the entire be all and end all. But the fact of the matter is, if you look at the recipe for economic growth, it has two key ingredients: the number of people and how productive they are. The number of people is growing more slowly, so the labor input to economic growth is growing more slowly. The trend in growth is going to come down. And when you have a lot of debt and you have very optimistic expectations of future earnings growth, which depends on future economic growth, then you have some challenges. And when you deal with, and government revenues also respond to economic growth. So we're going to talk about this later, but it makes the challenges going forward much more severe. And it puts more onus to deal with the climate issues separately as well.
Right, and obviously climate change is a huge cost to business and society in a general rule. But also, just to sort of link it back together with population growth and the demographic shift, I think it's important to realize for the investors that the working age population is also shrinking at a very rapid pace, and that has tremendous impacts on how we actually, whether it's going to be inflationary and those other kinds of things. So that's why we thought this is an important component to highlight for investors.
For sure. We're going to bring in JC now, who's put together a very interesting Venn diagram along with our producer, Daryl. So we're looking at demographics, deglobalization, and inflation. Those are two other things that we're going to get to in just a second. So you've got keys to success as well. So JC, can you run us through this? And we also see a number of companies within the Davis Rea Equity Fund, and Davis Rea clients hold this in segregated accounts as well, a number of these companies, and you see them overlapping a number of these themes. So walk us through this, JC.
Sure. So I think I'll just start with the demographics part, just to keep in line with what JJ talked about. But like we've seen population growth rates slowing sort of since the baby boom era, right after World War II. and it's having a big impact on a lot of things. But I think two of them in particular will be in the future. We're going to see a lot greater demand for healthcare because obviously, as you get older, your requirement for healthcare are a lot higher than they were when you were younger. And the second one is going to be, like John mentioned, the labor force is going to look very different. We're going to have fewer people coming in to replace the old people leaving in retirement. So companies are going to have to really start to think about how they're going to do things differently in order to accommodate that. So shifting onto the healthcare front, we own a company called United Health. We really like them. It's a large managed care and health insurance company that operates multinationally, but primarily in the US. And they've done really well over the pandemic. And I think that's partly because they've been really investing in their future and rounding out the sort of technology capabilities that they have and the ancillary services that they can offer. They're moving out of sort of just the legacy managed care and insurance side and doing things like pharmacy benefits management, at-home care services, and I think most importantly and most interestingly, in telehealth. And that's because United Health is so big and their access to their customers' data is so big and established, it puts them in a really good position, a sort of unrivaled position to be able to capitalize on that from a telehealth perspective and a benefits management perspective. And when I sort of look at the future, I kind of think about United Health as a sort of quarterback of the healthcare system, where they can connect practitioners with patients on the front end and also manage the financials and the back end sort of insurance and administrations, the administrative needs at the same time.
And JC, I was just going to say, within demographics, you've also got Rockwell. So is that a big play on robotics if the labor force is shrinking?
Yeah, I mean, I think, if you're looking at a labor force that's not going to be the same size as it was, in 20 years as it was today. And you have to think that a lot of those jobs that are going away will be sort of in the more autonomous manufacturing, logistics side of the economy. And so I think Rockwell has a big part to play in the future because they're an industrial automation company that's focused on sort of retooling legacy manufacturing and production lines into something that's smarter and more automated and sort of more geared towards the future. And they operate across a range of industries, whether it's automotive, semiconductor, warehousing, logistics, which has been huge during the pandemic. They provide sort of smart solutions that are cost effective and sort of increase productive capacity at the same time. So I think there's a lot more to come from Rockwell.
Yeah, JC, also I think it's really important to notice, when sometimes it's just sitting at you in plain sight. And here's, you look at the chart of this company and the stock has fallen substantially, reported excellent earnings. And you hear about, Britain or Europe's going to build semiconductor plants, America's going to build semiconductor plants. We're onshoring, we're trying to bring jobs back to our own countries. And the labor force is shrinking. Rockwell has an extremely bright future ahead of itself.
And I hear that a lot of electric vehicle manufacturers, whether they're wanting to get into the game or they're in the game already, they're knocking on Rockwell's door to build these facilities.
100%. Great opportunity.
And then a couple of other names here, Stryker and Thermo Fisher Scientific. Am I right, JC, in saying that not only do they make medical products, but these are the kinds of companies that can do very well in any environment, whether the economy is doing well or is slowing, or even maybe not a recession, but it can do well in a lower growth environment, or they both can, because the products that they make are needed on a regular basis.
Absolutely. And I think Stryker in particular, they are a manufacturer of medical devices and surgical equipment. They've made a big name for themselves with their artificial knees, hips, shoulder replacements, things like that. And the demand for those never really subsides. And particularly as you have an aging demographic, I think you're going to see the demand for that really continue to grow. An interesting thing about Stryker is that during the pandemic, they held their own, they did okay. But if you compare them to sort of the broader healthcare industry or the stock market as a whole, they did lag a little bit. And that's partly because if you need a new knee or you need a new hip, it's not necessarily life-threatening, and it's considered to be an elective procedure. So you've seen a lot of those surgeries get pushed back or delayed. And that's been a drag on the company's performance in the interim. But I think moving forward, you're going to see a big explosion of demand as people, the economy reopens, they're allowed to go back into the hospitals and get these procedures done. So I think you're going to see demand sort of shifted forward, but also a long-term runway for growth as you have an older population that are going to increasingly need these types of services. And they're also sort of at the forefront of robotic surgery and surgical automation, which I think is going to be huge as well, because it dramatically reduces the sort of human errors associated with surgery. The recovery room times are dramatically reduced, and so that really reduces the burden that you have on the healthcare system. And it's going to be really important because demand is going to be there, and you're going to have to think of ways to sort of eliminate that stress.